All right. Here, I'm gonna just do like a quick. I'm not gonna stay on too long, but I just want to do a kind of like a walkthrough of what it's like for me when I'm doing my back testing. So what does a back testing session look like for me? What am I, how am I marketing my charts? How am I looking at what's going on in the market? And so this is basically, I'm just gonna do a screen recording of what I'm looking at. So I just rewinded to some random place in November. So this is Friday, November the 10th, and then back, So normally, what I'll do is I'll go here and I'll put in these times of what time I'm usually starting my session, and I'll mark it so that I'm not just trading randomly, or I'm not just back testing randomly in random times. That's one thing that you don't want to do, is just start back testing random times, but you want to back test actually within where your session is going to be. So here, I'm back testing where my sessions normally start at. And so usually I'm in the market around like 7 a.m. This one is 6 a.m., between 6 and 7 a.m., right? Um, and so then I'll go here, and then normally I'll start on my higher time frames like I'll normally do when I'm trading the market, and I'll see what's kind of going on. So here on the 4 hour time frame, I'll just look at, we got high, swing low. Um, so from the wick high to the swing low, on a higher time frame, I'll just like start marking up. On the 4 hour, we got a gap right here, which is obviously coinciding with the 50 to 60% retracement on the 4 hour. So I'll put here, and then I'll come in here and possibly put, um, then I'll put something like 4 hour, 50% is 61% fair value gap, right? So that's a gap that needs to be filled, and change this probably like to center, so that when I am looking on the smaller time frames, I'll have something that I can refer back to, right? And then just kind of look at, we're obviously on a downtrend on the 4 hour time frame, so we're creating lower lows, lower highs, lower lows, lower highs, right? And so we got a few areas where we're looking to possibly fill. So we got a gap here, and then we got a gap here, and this is rough, right? You can say, hey, this actually right here on the 4 hour will be more of a gap, and then likewise there you got somewhat of a gap, right? So then I'm coming down to my 1 hour time frame and seeing what we're looking like on the 1 hour time frame, right? So 1 hour time frame, we do look like we're in a form of consolidation. And then what I'll do is normally kind of mark out like I would normally do on a day-to-day basis, right? So we're getting close to the session. This candle is currently at 4:30 a.m. So what I'll probably do is come and mark, right? And then I will look possibly to see how we get a response to this zone right here. So I'll just say response this zone, and then basically write little notes there. So we're looking at how we respond to this zone, right? So then I'll be looking at, okay, we're right around this time here where we're starting my session. So it's around 7 o'clock. 15 minute, definitely got an uptrend. And like I said, I'll just be reading this just kind of like I'm in the market for real on a day-to-day basis, right? So we got an uptrend, we got a rejection off of this area. So I'm gonna be looking on a 30 minute. We're looking potentially at a break of a trend line, and then we got a rejection off of this zone on the 1 hour time frame. But we also crossing this MA on the 1 hour, so we're going to see kind of what it does. I will kind of wait to see what it does a little bit, and Then I also have my notebook and I'm taking notes on kind of like what I'm seeing in the market, what's going on in the market, right? And then like my wins and my losses. So if I take 10 trades and I'll kind of look and say, okay, I won seven, lost three, or won six, lost four, whatever the case may be, broke even this or that. So I always have some type of notes that I'm taking. Now I'm not really taking many notes because I'm just coming in here to kind of fine tune my skills a little bit, right? So I'm looking at this here. So what I'm seeing is just like I'm gonna give this a little bit more time to kind of see what this does on my 5 minute. I don't get a real break. Um, so now we get a break of this trend line. So now on my 5 minute, I'm looking at from this high to this low and looking at what we're possibly looking at on this 5 minute candle. So we do have this zone right here, which is the 5 minute, 50 to 61%. So I'll put a 5 minute 50% to 61%. So now, so I'm looking at this and I'm looking for potential sales, right? For rejection off of this particular area. But what I want to see is more of a reaction from the higher time frames of a reaction off of this zone. So I feel like this may push up a little bit more, right? And so here we got a nice little support zone in the 5 minute time frame. And so what I'm going to do is I'm going to be looking at possibly catching a sell off of that zone, just depending on what the higher time frame is telling me. So in the 1 hour, I'm still getting some rejections there. Still showing significant uptrend movement, and then potential cross on the 30-minute time frame on my MA cross. So we do have a nice resistance right here that's holding. So same thing, I'll just go through and mark these zones, right? So I'll go and mark, all right, this is what we're looking at. Boom. So potentially looking for a sale, right? And then just seeing how this reacts. So again, we are on the uptrend. Now another thing I would want to look at too is saying, okay, since we are on the uptrend, we got to swing low, swing low, swing low. Right, so this may just be a little quick retracement and not actually a break of that trend line. This is really the significant trend line right here. So this may be a little retracement. So let's see if we go from this swing low up here to this swing high. This is right into that 38%. So this might be telling me, hey, this might be just a little quick swing back down before this pushes up. So 4 hour, we are looking at potential move up, right? So I'm going to wait and see what I'm actually looking for and look at, right? So we do have a nice bullish candle on a 5 minute. All right, now we got a nice, push down, and let's see. So now we're just playing around in this area, right? We're not really getting anything that's happening. And usually I'm out of the market at around like 10:30-ish. So I'll put another between 10:30 and 11, just depending on. So I'll just put 11 just in case. So at least I know here, this is kind of like the end of my session time. So if nothing happens between then, I'm like, okay, well, I'm not going to really be sitting here all day trying to wait for something to take place. So normally with my strategy, I can find a setup in a good amount of time within between 6:30, 7 a.m. till about 10:30, 11. So if nothing is happening during that time, a lot of times I'm not even going to trip about it. I just want to take a trade, right? And that is something, if you can do that as a trader, great. Like if you come into the market and you're like, hey, I don't have to take a trade every time, Great. The only thing about back testing, sometimes it'll show you on a higher time frame what it does before it shows on the lower time frame. So you can see on a higher time frame whether it made a move. Sometimes I just have to disregard that. So like here on the 1 hour, it'll show like, okay. So on the 1 hour, I would still be looking for buys, honestly. Now that I'm looking, I'm like, okay, I would probably still be looking for buys. As I said, that was a retracement into that 38%. Might be a retracement into from this swing low here up into this zone. That is a retracement into that 50 to 61%. And honestly, I think I'm gonna be looking for a buy. So what am I doing here? I'm marking out that 50 to 61%, right? And then I'm gonna put 1 hour 50. I'll put 1 hour 50%, 61%. All right. And then I would probably put this too. Buy. Oops. Buy. Oh Lord. This keeps happening. All right, inside. All right. Now let's try this again. Zone. All right. Bingo. So if we drop in, so on a 30 minute, we do got that cross up. 15 minute, I am getting that cross up. 5 minute, I got that cross, kind of a little bit. So here I'm looking like, okay, it's more of a clear indication. I might be looking for a buy. So let me see on a 5 minute if I can get a pullback into the zone where it's at right now. I might be looking for buys, right? Or potentially into that lower zone. So here, we're looking at a potential buy from that zone. And this is just rough, right? This is, when I'm back testing, I'm doing rough back testing. I'm not trying to get perfect entries. I'm not trying to get perfect exits with every single thing. I'm just getting rough, roughly looking at the market. And then I'll study based on the certain results that I get. So I can wait for this to come back down here, drop that down a little bit, and then possibly get a 7-to-1, which I think I'll do that. So it never got that push down into that zone. But if we look, right, if I had entered, so I could have waited for that zone. And actually, as a matter of fact, I'm looking here, right? So from here, that was a good trade. Why? So if we take this away, right, and we go back to where this was at, okay? This is how I study to get a better understanding of what's going on in the market. So I did see, like I said, on the higher time frame, we did get some upward momentum. We got the push up that signified, okay, we might be still looking. We got some good momentum, green over red on the 1 hour, green cross over the red on the 30-minute. And then we did get that green cross on the 15-minute. Now, being super safe, I would have been waiting for this to come into this zone, right? Which, like I said, is super safe. It's already tapped back into that zone. So for me, for it tapping into this zone, I could have been super safe, and I could have also said, okay, we had a pullback down into that zone. From this candle right here, you could have been a little bit more aggressive, or you could have said, hey, from this swing low up to this swing high here, I'm gonna be looking for, which if I seen that it already tapped into my hourly zone and I've got more momentum, I'm just telling you honestly what I probably would have really looked at in the market is that I would have been like, okay, Now I'm seeing we're on the uptrend. This tap back down into that 1 hour time frame. Now you could have had a entry right there and say, you know what, set your stop loss right below that, and then being that you're on the 1 hour entry zone or 1 hour pullback zone, come from this high down to this low right there from those wicks. Say your take profit for up here, right? Boom. So that's one way you could have did it. One way I would look for entries. So if I'm really like attentive and paying attention, that could have been an entry right there. And another entry is after it broke this trend line right here, right? We tap back into that zone, then we got a break. That could be another indication. Hey, I'm going to go take a buy right here, but I'm waiting for it to push, so I can wait right here. Or you could say, I wanted to push up a little bit and then give me a little pullback. So what would I be looking for a little pullback? So soon as it gets to this high up here, you pull your thing from the bottom of that wick to the top of this wick, that high right there, then this could have been that next zone that you went for, right? So that first entry right here would have gave you an 11 to 1 if you were really aggressive and you set your stop loss. Like, so this is one thing that I learned. When I set these zones, a lot of times I set my stop loss very slim, because these zones, if they go past those zones, most of the time they're just going to keep going and reversing, right? And I found 90% of the time when they come into these zones and those zones hold, then they're not going to break too far past these zones. Or if they do break past these zones, they're just going to go, right? So this zone right here is this trend line as well as this 50 to 61% on the 1 hour. So then you got this next zone right here, which is that 5 minute 50 to 61%. So here you could have been like, all right, and this is how I study the market. This is how I backtest and study the market and see what it does. Okay, so backtesting is rough, but you can go in and you can fine tune your backtesting as much as you want to do it and however you want to do it. You can come, this is how you learn the market, right? So here, boom, from that low to that high, this is that zone right there. Now it did tap back down into this zone in the 5 minutes, so you could have been more aggressive if you missed your entry there. You could have still came back here on this wick down into that zone to say, you know what, like this wick here, I want to catch that wick because I missed my entry. So let me try to get my entry back into this location. So that was on the 5 minute. If you look here, that was another that was a 78.6 retracement, right? And I'm breaking that up a little bit. 78.6. All right. So that was the 78.6 retracement. That it tapped kind of past that, kind of did give 100%, almost 100%, which is fine. Give me 1 second. So it kind of did give, yeah, it kind of did give that that 100% retracement. But this is that second zone. If you, it's like, hey, it wicked down there, but it still closed in that zone on that 5 minute, that could have been another entry, right? So you could have said, you know what, I'm going for that entry as well on that zone. Set your stop loss right below there, and then set your take profit for that same location. And look, you still got a 12 to 1. Now that can be a little aggressive. Some people are like, oh, that's too aggressive. Set your stop loss right below that MA right here, that 50 MA. You still got a 6.89 to 1, right? And so we're gonna see how this rides out. So boom. Ooh, we getting pretty close to our stop profit. I mean stop loss. All right. Boom. Okay, so look, like I said, past that zone, that thing came out of there a little bit. Stop. Now let's see what this does. Now you're in floating profit. Now if you came down here, you're floating profit. What's that? You're in floating profit already a 5 to 1. Look at that. You're already on that first entry right there. You're already floating at a 5 to 1 profit. For this one, the second entry, you're already floating at almost a 3 to 1 profit, right? So And we got another entry for anybody who missed their entry the first time. On that second entry, and you say, hey, I missed my entry, you got pretty close to stop loss right there. Or if you have moved your stop loss to break even, you're at break even, you got stopped out at break even. If it still looks legit, enter into it again if you want to. Now, I'm not even gonna lie, I would still be mindful of this resistance right here. That still would be a little bit more of a, like, for me, I still would be paying attention to how this responding to there. But ultimately on that 1 hour, I'm looking at this to be some upward momentum and possibly breaking past that, along with that fair value gap on the 4 hour we got to fill. So let's see what happens. All right, so you may have got stopped out at break even. If you got this first entry, you didn't even touch your entry right then. So if you move your stop loss to break even on that first entry, you were still good. You didn't get stopped out. Second one, you probably got stopped out on break even. Could enter back in if it's still looking legit and go for the same, literally the same trade, right? Now, what am I looking at here? So when I'm in the trade, right? So this is what I would be looking at as I'm in the trade. I'm back testing. So now I'm looking at potential retracement zone. So now I'm looking from pull from that low to that high, and I'm looking at where this could possibly retrace to, right? So I'm looking on the 5 minute. This could possibly come back down and retrace into that zone now. So let's see what happens. All right, boom, look. We got to retrace, tap back into that entry again, right? Tap back into that entry again. But I mean, chances are you could have probably been like, I'm holding it, but look at where it closed at. It closed right into that retracement on the 5 minute and then push right back up, right? So some people could look at this and be like, well, you know what? I can get out right here. If you got out right here on your first entry, you would be up 7-1. Who's gonna argue with a 7-1, right? Second entry, if you got out right there and you're like, I'm taking that, you're up a 4-1. Who's gonna argue with a 4-1, right? Great risk to reward. So boom, those who held it, they said, hey man, we kind of got some potential to get past that zone. Let's see what happens. Finally, you get a little bit of a break above this area here, right, where this was holding at. Boom. So you had this hold right here, right? Boom, you got that where that's held. Now you got to break above that. For me, I'd be looking at that, and as long as on my 1 hour, I got confluence on my 1 hour that we still got some upward momentum, or we could potentially have some upward momentum. I got a lot of wicks to this downside. So if you look here, a lot of wicks trying to push down. Sellers couldn't come in the game and push that down. Now you did get a couple entries. Maybe you stopped out at break even here. You entered in again. You went up to about a 4-1 risk to reward. And maybe you got out there, or maybe you moved to break even. And even here, if you moved to break even, you still didn't get stopped out there. So you're still in the trade, right? So you didn't get stopped out at break even, and now you're letting it ride. Now, are we gonna get a retrace now? Let's see what happens. Are you gonna get stopped out at break even on this one? Nope. Still close within that 50 to 60% on that 5 minutes. So from this new low right here, right, to this high, look at where that continues to hold at. So that's holding. So that lets me know, okay, this holding. Now you can either say, hey, when it gets back, if it gets back up to here, I'm just gonna take my money and run, forget it. This is a pretty significant resistance. I can take that 4.89 to 1 and go about my business. Or you can say, you know what, my strategy says that this is gonna continue to push up, potentially. And so let's see what happens. So boom. So look what happens. You hit that MA again, and if you notice, all these times it's bouncing off of that MA. So bounce off the MA here, boom, bounce off of MA here, bounce off that 50 MA here, bounce off that 50 MA there, bounce off that 50 MA there. And next thing you know, so let's see where this, and then I can almost guarantee right here it was a 38.2 retracement. How much you want to bet that's a 38.2 retracement? Probably from here or here, that's a 38.2 retracement. So let's see. Oh my God. Oh my Lord, would you look at that? Would you look at that? Huh? Yeah. So then if we go from here to this swing low right here and then go up to there. Look. Okay. Look at where that retraced at into the 50 to 61%. If you came from this high, I meant sorry, that low right here. If you came from that wick, came right here, look at where it closed at. 38.2, tap down right into 50%. Those fibs, man, I love them. So guess what? Boom. So where do we get a retracement at? So retracement from here to here. So now look, we got a clear retracement back into that 50 to 61% again. Now this is, I should be doing a fib strategy because these fibs are ridiculous. So look here again, tap right back into that 50 to 61% on the 5 minute from this low up to this high. And look what happens. Look what happens. Uh-oh. I'm gonna take my, oh wow, boom, blew right through your take profit. Now, I call that a win, right? You probably got stopped out at break even here, entered same parameters, same exact parameters, or you got down here and you entered into the trade, you got 11 to 1 risk to reward, crazy. And then here you got a 6.87 to 1 risk to reward, or once you saw that thing get some momentum, you could have probably held this and say, you know what, I'm gonna hold it and see how far this thing actually goes. Now let's see how far this thing actually would have went. So it would have reversed right there, right? And probably came back down to retrace and retest. So let's see. On the 15 minute, this is how amazing these fibs work. So on the 15 minute, we got this zone right here, and let's see what happens on the 15 minute. So that would have been the end of session. 15 minute retrace right back down into that 50, between that 50 and 60%, and then went back up and kind of went back up there a little bit, played around. So anyway, so here I'm gonna put win, and then you can put, oh man, oops. So let's go back. Let's go back. I'm not even looking at what's going on. Is this where I was at? Why did I feel like I was looking at it? Was I looking at oil? Yeah, I was looking at oil. That's what it was.
You're a nigger running for president of the United States.
Excuse me. Excuse that. So that's one trade, right? So this is how I will back test. So you got a win. So you got either 11 to 1, or you got either 11 to 1. You got either 11 to 1, or if you held that up there, it's 10 to 1, right? And so for me, that's end of session, right? So at this point, I'm done for the day. Boom, that's a win. You got a crazy risk to reward ratio. All right. And then, so now I'm coming back to the market, right? So this is next day. I'm preparing for next day. So now what am I doing? Next day we got a break of this high here. So what am I looking at? I'm looking at, all right, I'm believing that oil is going to begin to try to come fill this fair value gap, right? So I'm going to reset some levels. So on the 1 hour time frame, this obviously has created a new high. Boom. 1 hour has got a new high there. And then we've created a retracement. So here from this low all the way up to here, we retrace on the 1 hour right back into that 50 to 61%, right? So we got a retracement and then it's pushing up, right? So that's what I'm looking at now. I'm looking at, okay, we're on an uptrend. We're above that 50 MA on the 1 hour. So now I'm going on the smaller time frame and going on the 30-minute to get to session start, right? So we're here close to session start. So we got to pull back. Now on session start, I'm going my 30-minute time frame. I know my 1 hour time frame. I am on an uptrend, right? So what I'm going to be doing now is looking at, all right, I got a significant resistance up here. What is this going to be telling me? There might be a drop. There might be a supply. We're getting a slow momentum on the 1 hour time frame. So I'm going to be looking at on the 30-minute where this could possibly retrace to. So from a high to low, I'm looking at a possible retracement zone on the higher time frame from here to here, right? And this is all I use is Fibonacci. I use my MA cross as extra confluence, and then my regular MA. To be honest with you, I haven't even really used too much of my super trend. I might get rid of my super trend in my strategy because I don't even really use the super trend. It's just kind of there. And I really like my strategy without using the super trend because I use fibs to set my levels for take profits and things like that. So my super trend was just kind of helping me when it came to holding trades. So I really don't need it that much to hold trades anymore because I set, where my take profits are going to be potentially with the Fibonacci. So I'm gonna take that off just for the the duration of this, and I'm probably gonna try to just take one more trade or see one more setup to kind of show you again how I look for the setup. So 30-minute time frame we got right here. So I'm gonna write 30-minute like caps minute 50 to 61% retrace. All right, so boom, that's that. So I'll set that there. And then I'm coming on the 15-minute to kind of see if we had any potential retracement zones already. So we do have some gaps here. It's kind of in correlation. We got some gaps down here that could potentially get filled. 15-minute time frame, I'm gonna come and set, some of these levels. All right, so I might make that yellow, and then see what happens. So we're in session now. 6 a.m. possibly at the computer right now. We're in session. We're above those MAs on all three time frames, and we got some significant uptrend momentum. But we also got a potential lower high right here. So we'll see how this kind of reacts there, because we didn't break this high. We came up here, we didn't get too much higher than that. We didn't break this high. So we're going to see what tends to happen here. So from this swing low on my 5-minute, I'm going to look here, see where this swing low retraced back into that 50 to 61% on the 5-minute, and then on the 15-minute looks like on the 15-minute looks like the same thing. Give me 1 second. All right. So here, on the 15-minute, if I'm going here from the swing low up to the swing high, same thing. Came back into this 15-minute. So I'll put here, right, just for information purposes, 15-minute, 50 to 61%, right? 50 to 61%. All right, I don't want that to say 061. What does that say? 061. No 061. Right there. 15 minute, 50 to 61%. Right. So what I can do is possibly look for a buy off of this zone, or possibly wait for a deeper pullback um, to a retracement either down here, which could be a significant zone to possibly catch a buy off of, or down here in this zone to possibly catch a buy off of. So what I'm going to do is I'm going to wait, and I'm going to see what kind of indications we get that this wants to move, how this wants to move. All right. So we're just playing around there. All right, bingo. Look here. So I'm going to put 11 a.m. for my in session time. And then, like I said, this fluctuates, so that might not be 100%. Now, if I get an in session time, or if I see something potentially forming and I stay there a little bit later, that may very well be the case. But for the most part, I'm trying to get out at that time. Here, so now I'm looking at, okay, could this possibly come down to that 30-minute retracement before it looks for a buy? Now let me see what I'm looking at on my 15-minute. 15-minute showing possible sales. 1 hour, we're getting across, but it's not really showing me. I'm at 30 minutes, it's not really showing me too much. 1 hour showing me, okay, we might be getting some selling potential here. So we got a break of this low, right? So if we come here from this high down to this low, I could possibly look for quick scalps. So I'm going to show you how I could possibly look for quick scalps. Right, boom. So quick scalp, if I get a retracement to this zone, I could potentially look for this, right? So I could potentially look for a sell from this low. Is how I would probably set my take profit to that high. Set my take profit right here. If I was being extra, if I shows like some indication of selling potential, right? And which I do got lower low. I'm at lower high, broke, made a lower low. So yeah, on 5 minute, I'm like, okay, we could be looking for some sales, right? Quick sales. I wouldn't be looking to go too deep into sales. I could be looking to catch into this zone right here, or possibly catch into this zone right here, right? So either or could possibly work. So let's say hypothetically it tapped back into this zone and I did look for a sell. I put my stop loss. That's a 6.5 to 1. To move it down potentially a little bit further for 8 to 1. Loss immediately. Boom. Don't matter. That was super risky anyway. That's why I said if it showed potentially it could sell, you could possibly take that. But that would have been a very, very risky trade, but that would have been a loss, right? Loss. And guess what? If I risk the same amount as my last trade, I'm still up. I'm still up. If just say hypothetically I risked $100 to make $700 on that last trade, or $1,100, I'm still up $1,000, right? Because of my risk to reward, right? Or I could have sit here and made my stop loss a little bit higher here, which was on this kind of trade, you probably want to give yourself more leverage. Stop loss a little bit higher and see what happened. So, okay, so right there, that just showed maybe stop loss was a little bit higher. Aim for that zone here to get a little quick scalp, because you could have got a little quick scalp for 2 to 1 almost. But anyway, it goes, that's a loss. So I'm not even tripping about it. Still was looking for buys either way. Now, I did mention earlier that I would also have been looking to potentially take a buy off of this side, right? Off of right here. So here, I could have, set that for my but I also would have been looking at what's going on in my 15 minute. And I honestly really think what I would really wait for is for this to pull back down into that 30-minute zone to catch some trades off of that. So I'm gonna wait and I'm gonna see what happens, right? And sure enough, it goes up, right? So now, what do I do in situations like this? So as far as back testing is concerned, this is the zone that I initially said I could possibly wait for a pullback into that zone. Now let me show you how I would have taken a trade off of that zone. Now this could have been a day where I was like, all right, I'm gonna be a little bit more aggressive, take a trade off of here. Let's see if that zone, okay, so look here. Boom, this zone correlates with that MA on the 15 minutes, so that could have still been a significant place where I would look for it to hold. So this is where I study now and say, okay, how would I have, how could I look at the market and understand the movement of the market? So even though I had a loss right there, you could have come here and say I study and break down, right? So we got the 15-minute MA right here correlating with the zone that I would be looking for a pullback into potentially. And then on the 30-minute, look at where the 30-minute MA is at. It's in that zone there. Now, either one of those, there's no guarantee which zone it will want to pull and react off of. That's kind of the tricky part, because sometimes you have to be risky and sometimes you be a little bit risky and it does its thing. So here, if we go to the 30-minute time frame, let me show you something how that fib even lines up. So that fib, and what I've been doing recently is kind of changing my strategy in the sense of adding the 38.2% retracement. So I could have, or probably in the future, I will come and say, okay, let me at least mark out this 38.2 retracement zone and see where that lines up with the rest of everything. So I can put 30-minute 38.2 2%, right? And so then I will be mindful. So next time I can be mindful and say, okay, I'm looking for this zone here, this 38.2 30-minute 38.2 retracement zone. I can look at that and say, okay, that's a significant zone. When I drop down on my 15-minute with such a bullish momentum on the 30-minute time frame, I've noticed those could also just pull back to that 38% before it begins to push up again, right? So what can I also do here? I can say, okay, next time I can look and say, I'll keep my mind out, keep my mind open for that 38.2. And so then how would I look to possibly take a trade off of here? I would have put my entry right there, probably put my stop loss right below that wick on that 15-minute. And then I could have took my fib right here from here down to where that low wick came down at, and bring my take profit up to that 200%. Now look at what we have. We have a ridiculous risk to reward. Might not get all the way up there, but after this loss, just say with this loss, you risked $100, right? So with this win, so just say hypothetically, let's go calculate. So just say you got the, we'll say hypothetically you took, for safe traders, right? Let's say you took the first entry. Let's say you said, okay, I'm gonna take that first entry. You took that first entry and you got out right here, right? Or, you know what? How do I want to do this? I'm trying to think of the most realistic way. Somebody who trusts their strategy. I'll put somebody who trusts their strategy, right? So you got in at that first order and you put in your take profit and you let it ride to your take profit. You risked $100, right? You risk $100 to make 1100, right? So here with that, so now you won, right? This one hit your take profit, right? So you made 1100. So we're up currently right here. I'll say currently right here, we're up 1100, right? So we're up 1100 because we came with the win, right? Boom. So now we had a loss. With this loss, we were a little bit aggressive, right? But we weren't too aggressive. So we were like, hey, it is what it is. Our risk, just say you want to stay consistent with your risk. You say, I'll risk another $100 on that. That's fine. Or me in this situation, if I'm saying I'm going a little bit riskier, I probably risk half. So I risk $50, right? So I just lost $50. So now we're currently at a balance of $1,050 profit, right? $1,050 profit, right? So just say now, now you get to your second trade and you're like, all right, this setup, I'm actually a little bit more fond of a setup like this. So I might risk, my normal $100 again, right? You got to break of this high, boom. And now you're saying, hey, that 38%. Now say hypothetically, now you're on the 5-minute. On the 5-minute, you're going to be a little bit aggressive and you're going to tap back into that trade. Now you're going to risk again. You're going to risk $100 to make, what's this, a 15-1 if this actually hits take profit. So you're risking, which is ridiculous, but I've tried to tune my strategy to be able to make these type of trades, right? So you're risking $100 to make 1,500, right? All right, so we're at 1150. We're at 1150 for our total right now. You're risking another $100 because you like this setup, and so now you get a tap back into this, and you're aggressive. You're just so aggressive. Boom. Now you got that tap back into your zone. Now you're aggressive, and maybe you set your stop loss right below that. Now you're in it. We're in this trade, right?
I'll be right back.
Now we're in this trade. Boom. Okay, so we're floating profit right now. Boom. Now look at that. Now, with this being said, here, one candle, look at where you're at in profit now. One candle, you're already a 5.63 to 1 risk to reward. So you're already $500 in profit right here. If you wanted to, you could say, all right, cool, boom. All right. So boom, and you say, all right, I'm gonna let this ride out. I'm gonna see what happens. Now you get a retest. So now let's see where we came back for a retrace. So now we came back for a retrace to that 78.6%. We know on the 5-minute, our 50 to 61% is right there. So we're like, all right, we retraced down to that 70%. Now let's see what happens. Now we don't really know what's going on. Boom. So this is how I go through and I learn how the market could possibly move in the future and what to be aware of, right? This is very rough because sometimes, but now you're learning how to look at those fib levels, how it reacted to those fib levels, where it reacted, what the market looked like as it reacted to those fib levels. So now we got a little small uptrend right here on the 5-minute. I would go and I would do something like this and say, okay, now I'm looking forward to possibly break this high. Let's see how it's going to break that high. Mind you, we're still on our way to that fair value gap. So if you wanted to be a little bit more aggressive, you can say, I'm going to go for that fair value gap, right? So let's see here. I'm gonna clone this, right? And I'm gonna just say hypothetically speaking, I'm gonna say hypothetically speaking, just say you were wanting to be a little bit more aggressive, right, and go for that fair value gap. Now you can say, all right, I'm gonna be ridiculous. I'm gonna go for the fair value gap because I know it might want to go up there and fill that. So we got two trades right here that can possibly that you could possibly be in at this moment, right? Or two take profits rather. Sorry, one trade but two possible take profits, right? So let's see here. Let's see what happens. Boom. So we're on the way to the take profit for the first trade, for that first. And let's see if we're gonna hit it. We got a little retrace. Oh, we're playing right there. We're playing right there. So let's see what happens. Boom. Bing. Oh, well, look at that. So you're in this trade for, you're in this trade for 2 hours, about 2.5 hours, right? From 7:50 to 10:25 or 10:15. Sorry, 2 hours and 25 minutes. That's a beautiful, beautiful setup. So now let's say for those who said I'm taking my profit, I'm already up 15 or 13 to 1. I don't know how they got to 13 to 1. So technically we ain't get to the take profit just yet. So we're gonna wait just a second. And boom, here look like we right there at that take profit. Bang, there we go. All right, so now those who actually went and got their take profit right there, guess what? We're still respecting this trend line, and you're up. You're up now. We can say that's a win, right? That's a win. A win is a win. So that's a win, and you can say plus 1,500. Ridiculous risk to reward ratio, people. And this doesn't happen every single day, but I've learned to like tune my strategy to where I can look for these type of trades or get the highest risk to reward ratio. Now this 1,500, guess what? 1,500, what's 1,500 plus 1,050? This is simple math, but I'm gonna use my calculator anyway. So 1,500 plus 1,050. Now you're at a total of $2,550, right? That's crazy. $2,550, right? Crazy. All right, so for those who said I'm staying in this trade, let's look at where you can set your fibs now. So fibs, you got your fibs on your 5-minute, drop back into that 50 to 60%. From this low up until this high, right? Let's see where it dropped back into. Boom. Came, dropped back into that 38%, 38.2, but then we tapped into that 50%, right? So that is a significant retrace. And then let's see here, we got from this low up until this high here, we got another retrace into that 38 and then barely tapped that 50%, right? So you can say, you know what? I'm gonna take some profits out. I'm gonna take half my profits out, right? So you can say I'm gonna take half my profits out. You done made, according to this 1,500, you done made 750 now, right? So you're 750 confirmed profit. So you're like, all right, cool, 750 confirmed profit. You got a good 1 to 7 locked in. Now you're just letting the rest of it roll. So let's see what happens. Your stop loss is non-existent now. You're either break even or you put your thing in some profit here. So you could come in here and put your thing into take profit right here. So you're securing, even if it drops back down here, you're still securing, some money, right? So let's see what happens If you were one of them ones that say, hey, I'm gonna hold it till it hits my take profit of that fair value gap to fill that gap right here. So you can monitor this trade throughout the day and basically just let it sit. So this is at 11 o'clock, or you can just sit here and watch it. I mean, it's up to you on what you would want to do in this moment in time. So, right. So, we're getting some momentum slowing down, right? We do got a little resistance right here. So what I'm going to do is I'm going to go on my 15-minute time frame and see what my 15-minute is doing. 15-minute is showing me that there's some slowing momentum, right? 30-minute, same thing, showing me some slowing momentum. So you could be like, all right, well, I think I'm pretty good on that. I can close that, or you can say, you know what, I'm gonna just let this go all day again. Extend your trend line on your 5-minute. You see it still is respecting that trend line. And so you're just watching this to see what happens, right? So you're already up 2,500 for those who held that 15-1, right? Now you're holding it, right? You're a G. So now you get some a little bit, and so now you're like, all right, I don't know, maybe I'm good with this. This ended up coming up to about 17-1, so you might, about $1,788. Cool, that's ridiculous. Either way it goes off of $100 investment, or you're just letting this ride. So you done took your $700, you secured some profit, and so you're letting this ride. And so now let's see if you just let this ride during the whole day, what would have happened? Boom! Now look at this. Look at this. Now look at that. Now you let this ride. Now this did take all day. This did take all day, but look what happened. Look what happened. Wow. So that 1,500 that you could have made. Now some people are like, oh well, I wouldn't wait that long for an extra however much money. You made 1,500. This would have ended up being a 24 to 5, so that would have been 24.50. So 24.50, 1,500. Let's see. 24.50 minus 1,500. 950, right? So plus 2550 equals 3,500. So that's a ridiculous risk to reward ratio. So you basically made 3,500 or 20. Sorry, you made 2,400, 2,450 off of $100 risk, right? So just say hypothetically you're one of the ones, you held it. You're like, all right, cool. You made you a good 2,500. I'm one of them people. I don't like holding my trades that long, so I would have been up 1,500, which for me, that's one heck of a trade, regardless, right? So that's that. Now, the end of my day was right here. I hit take profit. I'm good, right? We're gonna do one more. We're gonna try to find one more setup. All right. So we're getting ready to go into this next day. What's next day starting time at? We're looking at getting into the market. Definitely not at 8:30. So we're looking at getting into the market around 7 o'clock. So I'm gonna drop this around 7 o'clock. A little bit before 7. So what I'm gonna do is now I'm going same thing. I'm going on my 1 hour time frame, and I am looking now. We're definitely considered strong uptrend. So I'm gonna go from this low up to this high, right? Now, if I'm looking here, where am I at now? That 35.8%. I'm at 38.2. I'm sorry. 1 hour, 38.2%, right? 1 hour, 38.2, and then I can come down here and say, I can potentially look for that 1 hour that 1 hour 50 to 61%, right? So here I'll put 1 hour 50 to 61%, right? Now we're on the uptrend. Now it's clear we're on the uptrend, right? So what I'm looking at now is my trading session just started. We hitting into, so I'm looking at what kind of reaction I'm gonna get in this zone. It looked like on my 1 hour, I'm hitting some sales, or I push it down for a little bit, but I'm getting to that MA on the 30-minute. MA for the 1 hour is right there in that zone. So the 30-minute can hold up pretty significantly, right? So what I can also do is come here on this 5-minute and set my trend line. Now for a trade like this, I can be a little bit extra careful. I can say, all right, boom, I'm coming up. This is how I'm back testing. I'm saying, okay, boom. Now I got a retracement into that 38.2%. If I get a break on my 5-minute, because I know I'm on a strong uptrend, if I get a break on that 5-minute, then I can go ahead and consider taking this trade. And what am I going to do? For my take profit, first I'm going to come and set this level here. You can come and set this level here. And then if I come and take a trade off of this level, what am I going to do? Same thing. I'm going to come here to this highs. This is look like some type of liquidity sitting up there, so I'm not even going to trip about that. But I'm going to come to these highs, come down to these lows, right? And I am going to set my take profit. So I already got my levels. I already got my retracement levels on my higher time frame. And I'm going to come in here and I'm going to say on my 5-minute, I'll probably go aggressive and go right at the break. Set my stop loss right there. Set my stop loss right there, and then look at where I'm setting my take profit. I'm setting my take profit up here. Look at that, a 9-to-1, or if you're okay with that, that's where you set it. That's your risk to reward. Okay, now 5-minute. We still got some. Ain't really got a break yet. Boom. Now look at this. You got a break. Now you can say, hey, I'm looking for a pullback. So for a pullback, you can say I'm looking for a pullback into that zone, or here you can come from this low up into this high, right? You can say I'm looking for a pullback into this zone here. Most of the time I'll be looking for a pullback into this zone on the 5-minute here, or you can go up to the 15-minute and say what would we be looking at for a pullback on the 15-minute, right? I'll set this level here because this looks like a nice little resistance zone on the 15-minute. So I'll come here and say, okay, where am I looking at 15-minute wise on a possible retracement zone? So it'll probably be similar to where that 5-minute zone is, or maybe right here, right? So you can come right here and say, oops. You can say 15 minute, I don't know why, 50 to 61%, right? All right. Or you can say, hey, I'm looking for a retracement on the 5-minute. You can be a little bit more aggressive. So you already got the break of this high, right? You got the break of this high right here. Great. So then you wait for a retest. Some people will wait for a retest on that trend line. You could wait for a retest on that trend line, but just say hypothetically you enter here and you said, okay, no, that's terribly wrong. Okay. I was about to say, what the heck? Not even a 1-to-1. So just say hypothetically on the 5-minute, you got to retrace into your 5-minute zone or your 15-minute zone right there, and you said, hey, I'm gonna enter right there. I'm gonna set my stop loss right below this area here. And now you're in it. Stopped out. So right here, we risked $100, right? So you risk $100. Reward would have been what's that? That would have been $900, right? So you're still up. What is your balance? Your balance, you were at 25. We were at 25.50. Where's my balance at? So 25.50. So guess what? We lost. That's a loss, right? So here our balance dropped down to 24. Okay, give me a minute. 24.50. All right. So I'm gonna put loss. That immediately hit stop loss, but it's all good. So right now we are currently, what is our win rate? So we're at 1, 2, 3. We took 4 trades. So we got 1 trade, 2 trades, 3 trades, 4 trades. So we're at 4 trades. We won 2, lost 2. So we're at 50% win rate. But look how much. And then for 4 trades, we risked $400. Oh, actually $350 because one of those we risked only $50 on. So, but we got a loss. So now we're at $24.50, right? Now, what am I going to do here? I'm going to wait. On my 5-minute, I'm going to wait and see kind of what type of response we get. All right, so now we're getting to pull back into that 1 hour zone. Now I can say, hey, you know what? I can be a little bit more aggressive now because maybe I got to pull back. I got a pull into that one zone that I was really particular about. So now I can look for that re-entry, right? That re-entry. This is how I would have. This is how I would have looked at it. Okay, I got to tap back into that original 50 to 1 hour, 50 to 61%. So what am I going to do? I'm going to re-enter that thing. Now that I see that it wanted to pull back, it really wanted to pull back and tap into that. So now I'm going to set my take profit again for this high. And so we got a 7 to 1. And then normally I would be pretty aggressive in these type of zones, right? So I get a move into that zone. I'm setting it, my stop loss right below that zone. And then I'm setting my take profit again from on the 1 hour time frame from this high down to this low. Well, actually from this high, you could probably set it from this high to this low, right? And now we're going to set my take profit just a little bit higher, right? Boom. And that's on the fibs. So those fibs, we'll see how those fibs begin to respond. Now, we're currently at 24.50. Now what are we doing? 24.50. We're coming in this one more time. And we're going to, same thing. We're just going to apply this right here. We're going to risk another $100. And then this time, we got another 9. So this is going to be 932. So we're risking $100 to make $932, right? Because we got another retest into this zone. That was a significant zone. So we got one loss here, and then now we re-enter. So now we re-enter. As soon as it tap back into that zone, you're aggressive. Now you're in profit. So let's see how this plays out. Significant, boom, we broke this high. So now look at what's happening. We got that push. Ooh, this thing is pushing. So on my 1 hour, we got that cross right here, and we were above that MA. So look at what happened on that 1 hour. It did tap. It did tap back into that MA. Bang. So I would take note of that for future. Might want to tap back into that 1 hour MA. Did tap a little bit below that 30-minute MA, but then bounce right back up. So that MA, those MAs held pretty significantly. 30 minutes, we got a cross right here, right? 15-minute, we got a cross right here above that MA. These are grade A trades. So now we lost that first one. Now we're in the second one. Let's see if we're gonna hit take profit. Boom. So on the 5-minute, we got from this low, that looked like a 38.2 retracement to me. Didn't even really come back that far, but it's all good. So I'm gonna mark out where this could possibly retrace to on the 5-minute. And then after this trade, guys, that's it. I'm done for the night as far as retesting is concerned, or back testing. So here, so that's where it could potentially retrace on the 5-minute. So we're just gonna see. And now, what is this? You're already up 7-1. So you're already up about $700 right now. You're already up about $700, right? Because we risked that $100. So now, what do we look at now? Are we gonna hit take profit? And we're gonna hit take profit. Oh, we're getting right there. Oh, bingo. There we go. Excuse the sound in the background. That is my daughter, which is all good. So 2 hours and 5 minutes, 9:35, you're out. And guess what? We just got a win under our belt. So we just got a win under our belt, right? So now I'm gonna come over here and I'm gonna say win, right? And then what did we make on that one? We made $932, right? So bingo. So we win. We got plus 932. Here we lost. I'll go ahead and put the loss so we know that we lost $100, right? But then we turn around and then what do? We just made $932. So for the day, we're up $832. So from that 100 we lost, now we're gonna go in here and add 932. So 2450 plus 932 equals 3382. Did I read that right? Yeah, 3382. 3382. Right? So bingo. Now we're up. So now let's look how many trades we took. We took 1, 2, right? 3, 4, 5. We took 5 trades. We risked $500 for all those 5 trades. Well, actually $450. We risked $450 between all 5 trades, and we have a. So we lost we lost 2 trades, 1, 3 in this back testing. We lost 2 trades, 1, 3, and we're currently up $3,382. And then let's say hypothetically what would have happened if you held this trade. We did get that retrace. Looked like it wanted to retrace all the way back down. And it did reverse, right? But guess what? You got your money and you in the market and you out the market. But it did come back and reverse. Come back and retest the zone. And it might just continue to push back up. Nope, came back down. But guess what? You wasn't in it anyway because you took your money and you ran. So between 5 trades that we took, one of them was a little risky. This one was a good trade, but at the end of the day, it still wanted to retrace down to that 50 to 61% on the 1 hour. We saw that once it hit that zone, we were a little aggressive again. It hit right back into the trade, and guess what? We hit for another 9 to 1 risk to reward, which is just absolutely ridiculous. So if you're somebody that has an account and you're able to risk $100 per trade, guess what? You're going in here risking $100 per trade. So we got a 9 to 1 on that trade. We got a 13. Actually, this ended up being a 15 to 1 on that trade, right? And then we had this trade, which was 11 to 1. So look at what you're making compared to what you're risking with this strategy. So simply start from the higher time frames, looking at the higher time frames, setting your levels on the fibs. Simple market structure, and then I just use a couple confluences. So setting your on the fibs, right? Boom, looking at what it's moving at on the fibs levels, right? 38.2. We did get a reaction, but it did want to dip down into that 50%, right, on the 1 hour. And then guess what? After it tapped into that 50%, 50 to 61%, took off. Same thing here. Had wanted to tap into that, wanted it to tap into that 50%. Just so happened to stop at that 30%, took off, right? And there's ways you can look at those levels on the higher time frame and then get your entries on the smaller time frame. So between 5 trades, 3 wins, 2 losses, filled this fair value gap on the 4 hour, tapped into it, wasn't too crazy, but tapped back into that fair value gap just barely. So you could have went for that for profit target 2, and that would have gave you a 10 to 1. So you would have made $1,000 there instead of just 932, which is an extra $70 or so, which is not too crazy. But guess what? 3 wins, 2 losses. And this is how I back test. So when I go to the live markets, I'm able to look at this same type of style that I'm looking at now and seeing how these things are responding to certain levels, seeing how these things are responding to on the lower time frame, higher time frame, to those EMAs, how they're reacting to those EMAs, and getting this. So this is how you can back test, and then practice. If you took a loss in your back test, look at why you took the loss, learn the details, the ins and outs. And I spend hours upon hours of time on the computer doing this, and I have done this for hours and hours and hours of time, learning how to actually read the market this way, just simply by back testing. So that's it for tonight. I am done. Hope this helps somebody there. And then here, look, that'll probably be around the time like 10:30, 11 o'clock. So look, I got into the market at 7. I got a 10 to 1 risk to reward trade if I held it that long, or 9 to 1. Held this trade for what's that? Held this trade for 2 hours, right? So I was there chilling for 2 hours, minimal to no drawdown after that second entry, and just basically took off into profit. And at a certain point, that was automatically a risk-free trade, and that's that. So I'll be doing more sessions like this where I'm just kind of back testing and just breaking down what I'm looking at back testing. And then even in my live sessions, you'll see continuously as I take live trades what I'm looking at in my live trades, and you'll see that these things line up directly to how I back test. And in live trading is a little bit different from back testing, right? Back testing is easier to go in and kind of just rewind or whatever the case may be. You use back testing for a time to learn, understand, and pinpoint maybe how the market react to certain areas. And in live trading, of course, sometimes you hit, sometimes you don't get those exact places. But if you will do enough back testing in the live market, you can eyeball what's actually happening when it's happening, so you can capitalize on it. So God bless you. Jesus loves you guys. Love you guys. May this help somebody. And if you do want to join one-on-one mentorship with me, just feel free to email or comment, send me a message, TikTok or YouTube, whatever the case may be, and I'll see what I can do about possibly helping you. I'm not a professional guru. I'm not an financial advisor by any means. I'm just a guy who loves to look at the market and learn what it's doing. So that's just who I am. And if you want to, learn a little bit more and I can help you, I'd be happy to do so. But until next time, guys, stay tuned. Glad to have you on. Again, if you have any questions, you want to be mentored, you have someone you want to join or be a part of what's going on at Eternal Kingdom Investing, feel free to reach out at any point and I'll be happy to respond to you and see what can be done. God bless you. Good night.